The price of gold is about to crash. In this video, I'm going to be explaining why the price is about to crash and also show you some examples. I'm also going to explain exactly how you can protect yourself from the coming crash and potentially benefit from it. Is now a good time to buy more? Should I hold? Or maybe even sell? Hopefully in this video I'll be able to answer these questions for you. And as always guys, if you've got any further questions, be sure to leave them down in the comments below and I'll answer them whenever possible. So to start with, I want to do a little technical analysis on the price of gold. Here we can see this giant steady rise in 2011, which was a great time for gold. The world wasn't really in a good spot after the 2008 recession, and most people, or most investors, turned to gold. Investors had lost faith in the centralised world we now live in. Governments had given too much power to the big banks and were effectively at their mercy, and their only response to a problem was to print more cash, further devaluing their currency. This caused a massive problem for investors because their cash was just becoming worth less and less. As a result, they needed somewhere to store this cash, and an obvious choice was to invest in precious metals like gold. Investors were bundling into gold faster than miners and processors could produce it. As a result, this massively spiked the demand for gold while also impacting the available supply, as the available supply was just getting bought up. As a result, the price of gold started to rise higher and higher until regular people, like you might find at a day job or just regular bin men down the street, also started investing in gold, sending the price into a bit of a frenzy. As the world started to recover after a near second recession in 2011, the world kind of went back to normal. People started selling off their holdings in gold to invest in the stock market again, and the regular people also sold their gold, therefore causing the price of gold to fall. The price of gold stayed flat in 2014 and 2015 and the start of 2016. The price of gold then started to rise around the time of Brexit because, well, what a mess that was, and then stayed flat until around 2019 when it started to rise again. The US and China were struggling to agree on trade deals. Interest rate cuts were just around the corner and the levels of debt in the world were absolutely huge. People knew that a recession was coming, but they just didn't know when or how. So the price of gold started back on the rise, and especially since the news of the pandemic broke, which has had a massive effect on the world, the price of gold has gone absolutely crazy, breaking past those 2011 highs and setting new highs never seen before. Now over the last few weeks, the price of gold has had a slight pullback. 2011 highs were around £1,150 an ounce. This soared all the way up to £1,600 an ounce and has pulled back to £1,450 an ounce, or give or take. The only thing that concerns me is that this chart looks all too familiar. Now if I show you this chart instead, it looks great. There were some highs set back here after a long plateaued period. There were some more highs set shortly afterwards, and then we just had this big explosion all the way to the moon. People were investing in this product left, right and centre, and not just investors, but regular people like bin men or just regular teachers were also investing in it as well, because it was almost a guaranteed way to become a millionaire, because there was absolutely no chance of this price slowing down. Then we had a slight pullback. That's okay, it's necessary, and the price just went straight back up again. Told you so. But then all of a sudden this massive crash happened. Bitcoin of 2017 had happened and the price fell down almost to exactly where the rise first started. Could this be what's in store for gold? Well, let's find out. As I'm sure you know by now, I don't just like to do a little bit of technical analysis and then say it's fact and then it's guaranteed to happen. So let's look at the fundamentals. If you're enjoying the video so far, be sure to drop a like down below and subscribe to the channel if you haven't already. Now let's get back to the video. Firstly, let's talk about the supply and demand equation and talk about how this is going to impact the price of gold. Similarly to the video that I made last week about silver, the pandemic has impacted the price and the supply and the demand of gold massively. The available supply of gold dwindled during the pandemic because obviously the miners and the processors of gold weren't able to work. The demand for gold also shot up as a result of the stock market fall, and therefore the price of gold started to rise. But that was obviously back in March. Since then, lockdowns have started to be relaxed, the miners are back working, the processors of gold are back working, the stock market is absolutely flying. It's had a bit of a pullback in the last week, although it did rise over the last few days, and obviously it's much higher than pre-pandemic highs. And therefore the available supply of gold has started to rise. because more is being dug out of the ground and more is being processed. And the demand for gold has also started to fall because your regular investors have gone back to the stock market and are just investing there instead. If the price of the stock market continues on this upward trend, then the price of gold is going to continue decreasing and the gold bubble will slowly deflate. More and more investors and more money is going to go out of the gold market and back in to the stock market. I think the price of the stock market is going to largely depend on what happens with the global pandemic. In the UK, the infection rates have fallen from around 6,000 new cases a day all the way to about 1,000 or 2,000 new cases a day. So obviously the infection rates have slowed massively. In the US, the infection numbers did increase massively from 30,000 new cases a day all the way up to 70,000 cases a day, but has since actually reduced back down to about 30,000 cases a day. If the pandemic numbers do continue to reduce, then more and more people will go back to work, more and more people will become employed, unemployment will reduce, company earnings in the stock market are going to go up as people are obviously going to be working, earning money and then spending it, and therefore the stock market is going to go up as well. But right now I just think that there are so many unknowns with the global pandemic. What are the long-term health implications of the virus? What about future immunity? Could the virus mutate and reinfect people that have already had it? Will a cure completely eradicate the virus like smallpox or polio, which haven't really been seen in the Western world for years and years? Or will it be something that keeps coming back, like the annual sick bug for example? Could it spread back to countries that have gotten rid of it just as easily as it entered in the first place? Now unfortunately I'm an accountant and not a top scientist, so I have absolutely no idea about any of this. But I do think it's something that we definitely need to consider in the long term. I think we also need to consider just how many people are behind on their rent payments or their mortgage payments, and also the likelihood of further economic stimulus, which will obviously impact growth and economic recovery. If the pandemic does start to get worse and the infection rates go back up, there could definitely be a chance of a second lockdown, and a second lockdown would almost certainly cause a second crash in the stock market. And obviously if the stock market crashes, well, the price of gold will boom. But at the moment, from the data currently available, it does look like the infection numbers are going down and therefore the stock market will continue to recover and the price of gold will continue to fall. If you've made it this far into the video, be sure to comment the words worldwide lockdown so that I know that you've made it this far into the video. Something that I also think is really important to talk about is virtual gold and the problems that virtual gold causes. Obviously, in the world there's only a finite supply of tangible gold, but the price of gold is made up of both tangible gold and virtual gold, and therefore the tangible gold could be fully sold off, but the price of gold could still increase and decrease as a result of virtual movements. Since the start of time, around 187,000 tons of gold have been mined, and the world is currently mining gold at a rate of 9 tons a day. But there's around 1.3 million tons of virtual gold sold each year, which means that there's about 5,500 tons of virtual gold sold each day. So that means that 99% of virtual gold that's traded every single day is basically imaginary because it doesn't have any tangible form. But that also means that it has no legal title and that no one really owns it because it doesn't exist. And that's a massive problem. But why? All of this virtual gold trading is effectively inflating the price of gold. It's kind of in a way like order spoofing, which is where someone places a fake order to increase or decrease the price of something and scare off the other investors. But what I find really worrying is the transparency of the reporting of the actual tangible gold. The LBMA, which stands for the London Bullion Market Association, are who report on the tangible gold for the banks. The LBMA, alongside the Bank of England, report the daily tangible holdings of the banks 3 months behind. So they don't do daily reporting and inform everyone of the holdings the same day. They inform people 3 months later. Now this is set to reduce to only a month behind. On top of this, the CFTC, which is the Commodities Futures Trading Commission, has found a number of the big banks guilty of manipulating the price of silver and the price of gold. They've recently found Scotiabank guilty and they face a $60 million fine for manipulating these prices in August 2020. 6 traders from JP Morgan have also been charged with manipulating these same prices. Now this is obviously a big problem because it could become similar to the credit default swap crisis of 2008, where at any one time the market for credit default swaps and synthetic CDOs were about 20 times as big as the market for actual collateralized debt obligations. Now obviously the market for gold isn't quite as bad as this and isn't quite the same, but I'm just saying that it could be on that same path. So what should you do if you're currently invested in gold or you're thinking about investing into gold? Well, firstly, I think that there's absolutely nothing wrong with taking some profits. Could the price of gold go higher than it currently is? Absolutely. But also remember that when the pandemic is finished and the stock market goes up much higher than it currently is, the price of gold will come back down. Because obviously gold is only seen by a lot of people as a temporary store of wealth when other investments aren't performing as well as they could be or should be. So you could take some profits now, you could take some more profits a few months later, and you could take even more profits 6 months from now. As an investor, you don't have to time the perfect bottom to buy and the perfect top to sell, because chances are you'll just be the one left carrying the bag when the price of gold takes a big old steaming hot dump. You could even enter the options market and the futures market and make some small trades betting against the price of gold in the future, so that just in case the price of gold does come down, you still profit. Or if you're currently only invested in ETF gold, maybe try and diversify and buy some tangible gold. Or if you're only invested in tangible gold, maybe buy some ETF gold as well. It's not going to hurt to have 2 different stores of gold. Or maybe, as a lot of tech stocks have been dropping recently, this could be a great time to take some of your gold profits and invest it back into the stock market in the hopes of a future stock market rise. I think diversification and taking some profits are both really important, because it allows you to lock in some of those paper profits to actual tangible profits and allows you to diversify your investment into other classes of assets as well, so you're not just putting all of your eggs into one basket. Ultimately, everything that goes up must at some point come back down, kind of like a cycle. Unless obviously you're invested in Amazon, in which case just carry on holding that bag all the way to the moon, because that one's never going to slow down. If you haven't already watched my video last week talking about silver, be sure to give that one a watch. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!